What's up, everybody? Michael Silva here. Don't worry about a thing, because every little thing is going to be all right. We had GDP data along with other macro data that came in that eased these recession worries, and the market ripped higher, closing about at the high. Not only did we gap up, but we also closed up at the high. We're going to talk about that in today's stock market brief, map out some key levels and some stuff to pay attention to, because we all know that as soon as you let your guard down, that's when risk can creep back in. We're going to get into it right now. Take a look at the S&P 500. Yes, as we stated, gap up and closed at the high. It is a somewhat of a hanging man candle as it stands right now, but we had a nice big push outside of that weekly expected move, which we'll zoom into, holding about 5 trading days, I believe it is. 1, 2, 3, 4. That looks like it closed above 2. So about 5 trading days above the 200-day moving average, which is positive. Mind you that it is still declining. We talk about that frequently, right? It takes a lot of time and effort to change a 200-day moving average from declining to inclining, and it takes a long time for it to be inclining to turn it to declining. Okay, so as we stand right now, there's some key levels that I'm still paying attention to. Up there at that 4,200, we're going to actually map out on Bookmap some other interesting levels moving up. And then also down here at 3,900. When I look at this, it does look like it's potentially wedging here at this particular point in time. So it will be interesting to see. We had Intel report after market close today. Does not look too healthy. It's not a huge market cap stock compared to the top 10. But, it may still shake up some other names. So we'll watch that. If we take a look here on the daily time frame as well, I'm just watching this channel and seeing how it develops. We got above the middle of that range. Like I said, it is a form of a hanging man candle right here. So if we start closing below the low of that, that can be bearish there too as well. We're above that year-to-date anchored VWAP, so the bulls still remain in control. We're above the week-to-date anchored VWAP with one more trading day left. So bulls got it. If we take a look at Bookmap, if you don't know what Bookmap is, I'll explain it really quickly. See all these colors on the screen, and you have some dark and you have some lighter colors. It tells you where liquidity is in the market. And then these dots that you see on the screen allow you to see cumulative volume delta. So it's basically showing, hey, if it's green, you had more buyers, and the bigger it is, you had a lot more buyers versus sellers. So it allows you to see much more than a candlestick chart can show you. If you have ever seen something that looks like this is level 2 data, right? So this is kind of hard to track. I mean, you got to be very good at reading the tape to watch this and see big changes take place. But this right here, it paints it onto the screen for you. Now, I'm looking at ES right now. This is the day of ES, okay? And as you can see here, we have some orders that I want to pay attention to going into tomorrow's trading session. We're looking at 4,100 and 4,095. Looks like some levels there to watch. And then to the downside, we've had this 3,980 orders right there too as well to pay attention to. So those are some bigger levels to just be mindful of going into the closing of this week. Earlier intraday today, so if you zoom in on this kind of stuff, like this is some of the data that it shows you. So when the market was selling off pretty severely in the early trading session, you can see that orders came in all of a sudden on this sell-off. And right when these hit the heat map, you can see that we started to bounce, started to go sideways. And then all of a sudden, as this order basically went away, well, actually it started moving up. And then as this order went away, we had a new order, big order come in here on the heat map, and that pushed this price back down. Then it came right back, and then it pushed price back up. And then all of a sudden it heated back up again and started moving price around there. So this is the type of stuff that Bookmap does for you. It's just incredible software for those that like to intraday trade or want to time the market better by looking actually behind, taking the blindfold off. If we take a look at the 15-minute time frame, we're looking at right now a possibility of a rising wedge, which we just recently discussed, but this is on the 15-minute time frame as price is outside of that weekly expected move. So if we do get a hit tomorrow and we get some sell side activity, I would be looking at that week to date anchored VWAP as a potential area for it to bounce if it were to come down into that area. Potentially a trade setup would be if it goes down through it U-turns and then breaks back up through it, and then you buy on the move. You don't want to buy like on the pull back like into it, because it could just keep on going. But as long as it can show some strength, then you can potentially buy on the breakout with a stop underneath it, and then play it right back up to the upper weekly expected move. So that's an option. Also, I know people that like to trade, back down into the weekly expected move. It's highly likely that we can travel around there. I don't have the chart of Tesla, but Tesla, not the weekly expected move, it broke out of that on earnings, but the earnings expected move, it hung around there all day long with just a bunch of chop. Okay, if we continue on, you can take a look here on the 15-minute time frame too. We talked about that broadening wedge pattern, descending broadening wedge, and you can see price started the day not today, but started this day gapping down back into it, which we discussed. Then we ripped up, we gapped where? We gapped right up to the weekly expected move, pulled back tested it, and then we started rising there throughout the remainder of the day, okay? If we take a look at the Qs, interestingly enough, I haven't brought this chart up for a minute, but this channel still continues to hold, so it's a nice bullish trend. We are well outside of the upper weekly expected move there, and we do have divergences building in both the RSI and the PMO. You can see that there too. We discussed that was a possibility yesterday on the SPY. If you take a look at the IWM, not too far off of that weekly expected move. Overall, we're above these 5-day moving averages. It's inclining, it's positive, it's bullish as it stands right now. Don't fight the tape, right? The tape is telling us that it's going up. Yeah, there's extensions where we can see pullbacks, but as it stands right now, the 5-day moving average on these charts are inclining. So if you want to get more bearish, it'd be nicer to see price come down and start breaking, a series of, obviously breaking the series of higher highs and higher lows, and then start putting in lower highs and lower lows. If you take a look at this too, this is interesting because it kind of looks like a, the bulls are, progressing up into this kind of resistance area right over here. You can see a low and then a higher low, and then you had another higher low, and then price consolidated. It zooms in right here, and then we saw a nice big breakout right there. So this could be the potential start of a stronger move, maybe into next week. That's always a possibility. We'll keep that, but we'll keep that as a possibility moving forward. Now we do have some stuff coming out tomorrow. We have ECB President Lagarde speaking, and then as far as like major reports go, we have core PCE, personal income, personal spending. That's an hour before the market opens up. So once again, the market has been very dependent on these macro drops, so be aware. We're still getting macro drops. Good news has been good news. Bad news might be bad news. Recently, bad news is on specific earnings has been fine because they've been gapping down. They've been ripping right back up. All right. Data is data. It is what it is. You can fight that narrative, or you can just play with what the price is actually doing. If you take a look at the dollar continues to just coil up and wedge. I'm still looking for some sort of a breakout that would probably bring the S&P 500 down, but it's still just in a steady. It's like bleeding out very slowly right here, still coiling up very strong. So at some point, I don't know what's going to break it, but be aware that just in 5 days from now, the Federal Reserve will have its rate hike decision. If you take a look at gold on the flip side, it's also wedging. We had a little bit of a down day today, bearish engulfing, right? This big red candle engulfed the entire previous day candle, and it did, it's pretty bearish because it gapped up and then closed well below it, and that could potentially mark a turning point. It's just been kind of dragging higher, just like the dollar has been kind of just dragging lower. So if the dollar does decide to pop out, that can send gold breaking down from this, taking a breather. And I'm thinking that, hey, possibly if it does break, I'd be bullish gold. I'd be looking in here, this zone, 1825 to start scaling into a position. That'd be nice. It might not reach down there, but maybe 1850 start a little bit, 1825, maybe a little bit lower, just to have some exposure to an asset that has been performing really well this year. If we take a look at copper was up there on the day today too. This divergence is still building as it stands. Let me tell you something. Copper looks like it's can take another leg higher, to be honest, but we'll see here if it starts breaking down, which could help take a breather there in the S&P 500. But as it stands right now, it's still holding strong. And I'll bring up a chart momentarily of the correlation between copper and inflation, right? The Fed is trying to fight inflation right now, and let me tell you something. Strong moves in copper, this isn't all that much. It's a strong move, But I'll get into that one later here. Let's just look at the 10-year yield. The 10-year yield is also still hanging out at this 3.4%, this area of support. So if it breaks down, this divergence will break and that divergence will break. But as it stands now, this could also be something that might be just pausing until the Fed says something or does something, and it could either make a big decisive move to the upside or to the downside. The catalyst is unclear. We had some big macro data come out today, but it didn't really change. It wasn't really a catalyst for anything. So there's something out there that will make this market move, and it just hasn't done it yet. If we take a look at the TLT, right? When bonds go up, yields are down. When yields go down, bonds go up, right? This is just matching highs right over here, matching highs. Now it's consolidating, okay? It could be potentially flagging right here. That would mean if to break out to the upside, the 10-year yield wouldn't want to break down, but there is a divergence there, and the MACD's, not the MACD, the price percent oscillator is curling down, and the RSI there too as well. If you take a look at the yield curves, still just look disgusting, right? The yield curve is minus 68 basis points on the 10-2, and then the 10-year minus 3 month is minus 122 basis points. As I stated, the Fed is in 5 days from now. So the FOMC meeting, it's coming to a theater near you, and I'm sure that it's going to be shaking markets. We'll look at what those expected moves are, of what the market's going to price in as far as volatility to give us a better idea. Now, the market, it did move up today, and you can see here there was a change in the terminal, the rate curve, right, or the pace of rate hikes. So you can see February 1st, right? That is going to be when they raise rates, a definitive, most likely 25 basis points. Who knows? They might surprise us. But as it stands right now, a 99% probability they're going to bring the terminal rate to they're going to bring out the current rate to 450 to 475, and then they're going to raise it again in March. 475 to 500 means 25 basis points, planning on holding it all the way till September. And then the market right now is saying the probability is to lower those rates 25 basis points in the fourth quarter, November, and then also December again. So, right, if Fed comes out and says, no, that's not going to happen, this will change. These can easily just pop right back up and potentially even go higher, right? Now, remember, the Fed, it's tightening, right? They're raising rates and they're tightening. And we know that when liquidity is drained from the system, more volatility takes place. The red line is S&P 500. And as you can see here, they are still, right, total assets, their balance sheet is still declining, which means that we still can have a lot of volatility in these markets. Back to the copper story, take a look here at this red line. The red line is copper. The blue line here is the CPI index. Now, year over year, right? So yes, it has peaked out over here at around that 9% and has been dropping, okay? And you can see here, copper kind of peaked out right here earlier than it, and then it started dropping, pulling it down. And you can see they move hand in hand for the most part pretty closely. Now, copper here, it's not fully updated. It's on a monthly basis, but copper has been moving up, which tells me, hey, if the Fed's trying to fight inflation and copper's moving on its way up, even energy stocks and oil, right, has been going up slightly there too as well. Is that going to bring inflation up? And if it is, what is the Fed going to do and or say about that to knock that back? Remember, 2% is their target. And if we don't continue to head down lower, what are they going to do to, stick to what they said that they were going to do? Well, we will find out. I'm not going to go here to make a bunch of narratives, but that is what it is. Take a look at some indicators. This right here is I'm just going to call it the NIM, right? This is a survey as to how, asset managers are positioned. And we have a 75% reading, means, 75% long over here. And I'm just calling out because I called it out on this last one over here. Few weeks back, you can see when it gets up into this level throughout the 2022, it has actually, right, it got up to a bullish reading, and that actually is a good contrarian indicator for marking short-term tops. So the last one was right here, just under 75, came back down a little bit. Now we're back up there again, right, as were the markets prepping higher there too as well. So as it stands right now, it's a bullish sign. However, it's even more bullish when it gets over 100, but these have been good contrarian indicators for the past year. If you look at the NASDAQ bullish percent index, still RSI is getting pretty overextended, but it can remain there for a while, folks. We talked about that one yesterday, but remember, it oscillates, right? It goes from up here to down here, from down there to up there, from up there to down there, and so forth. Continue on, and you look at the NASDAQ summation index. Nasdaq summation index is still moving strong in the upwards direction. You want to feel more bearish. You'd want to start to see this start curling back around and these dots to tick back above here. Why? Well, every time that we do that, we have been talking about it, and it identifies changes in the trend. As you can see, when it ticked over there, it went down. When it ticked over here, it went up. When it ticked over here, it went down. When it ticked right here, it went up. So it helps us identify changes in trend. If you take a look at the Nasdaq McClellan oscillator, you can see that there is a divergence right there as far as diverging from price. Price is moving higher. The internals are not as strong as it stands now. That could potentially resolve itself to the downside. We saw that here. And we even see bullish ones over here. We have higher readings there, but lower readings in price. Continue on and look at the BPINFO. This is the technology sector. It's up there as a 75% reading. It means that 75% of stocks in the S&P 500 technology sector are on buy signals based off of those point and figure charts. RSI is overextended, and just like I said before, this thing moves from overbought, oversold, oversold to overbought. Okay, so it is a little extended right now as price has been basically going straight up for the entire year. We haven't even seen it consolidate as it stands right now. Okay, so let's move on and we're looking at the NYSE bullish percent index. Negative divergence is still there as it stands right now, and RSI is a little bit overextended. And then the last chart I want to go over is the summation index. This thing is pointing straight up like a rocket ship, and price has been pointing straight up like a rocket ship. Divergence there on the NYSE McClellan oscillator. You can see a higher high there in price, and then the internals aren't supporting that move. We've seen divergences like this before, like right here and right here, right? So right there, and we saw right here, boom, boom. And you can even see it in positive divergences as well. So don't worry about a thing, right? Unless the Fed comes out and all of a sudden scares the market. That could very well be that next catalyst. As it stands right now, people, the bulls are here, and the bulls will remain here as long as we can still continue to hold that year-to-date anchored VWAP that tells us that the average person that has been buying the S&P 500 is in the green, and that's based off of volume. That's all I got for you on today's episode, everybody. Hope it helped out. See y'all later.